Definitely an interesting day today. Scott Redler, T3Live. Welcome to today's recap. So we started off weak. They shook the tree a little bit. We went below a few days' lows. Kind of the way I would have liked to open up, just to shake things up, just to get some supply out of the way, get some loose longs out of the way, which usually is me. But this time I actually bought some in there and then was able to add, so it wound up turning into a decent day. And now we're like knocking on the door again. Knocking on the door, breaking above this downtrend. And I hate when we're all anticipating what could be a really good trade, because a lot of us lose money along the way, or just lose a little brain power or hair, because everyone pulls it out, as we try and see it transform or transpire or ignite. So a lot of rumors running around. And now tomorrow, you have the big ECB meeting, whether they're going to cut rates, and then Friday starts the whole austerity scenario, the whole fiscal meeting. And so there's just so much to deal with. So, take trades and also know if you want to stick around longer with more risk. So that's what you have to know right now. And today there's a lot of one-off trades with relative strength into the weakness. And then you also had some macro moves. So real quickly, let's talk about the spiders on the S&P. Take a look at the chart. You will see that this morning, we pulled off a little bit, but we held the upper area, this upper flag. This is the area that's been holding this entire time. So it broke below yesterday's low. So that triggered some stops, not a lot of them. And then we held this area. I was not getting too aggressive down here because I thought maybe they would want to bring us in a little bit more, just to really shake things up. But, the bid came back. And now we're still hovering. This is a nice upper level consolidation after, a huge move. So if you actually even came in here and did your Fibonacci retracements to see, what type of retracement we could put in here to measure the move, this isn't even a 25% retracement of this entire move from that Monday after Thanksgiving to here. So that's showing commitment, that's showing demand. It could be a trap, I guess, based on the news that comes out. But all in all, you can't think of things that way. You have to follow your rules. And right now we're holding higher, so this is keeping momentum in the trade. And if we start to break above this area, we should be able to see this 1292 pretty quick. You remember the whole way here, 25% retracement, 25% retracement, and you had a nice move. Now just say we started from higher, versus that reversal on October 4th. This could be that first area that went sideways, consolidated, and now we could break above some pretty big resistance. So we'll see what happens. As far as something different, the banks led the way. We've been talking Goldman Sachs off the charts. We've been talking Goldman Sachs on the radio, talking about it with Jill, talking about it today with Stephanie, measuring the move. And the last trigger was 102. Nice bull flag, right? On the price point sheet, you name it, it was there. Sperling was all over it. Some of my crew caught it. I was out away from my desk, but I had some of the XLFs and caught JP Morgan later. But if you look at Goldman Sachs, really nice trade here, guys. Here is when it held higher, almost a double bottom. This was the first trade, went sideways, triggered again. Nice commitment, nice sideways move, and it triggered above this 102. This is why we said 102, because if you're short Goldman Sachs, you better cover above 102. If you think it's going to 110, 115, it's got to get through 102, and there it went. I actually missed that trade, and I came back and I saw JP Morgan wasn't through that point yet, so I put it on, and that just shows you how if you follow groups and sectors and what ifs or if thens, then JP Morgan followed suit. Take a look here, or it came pretty close. It was a lot lower, and I figured if Goldman Sachs could trade above its trigger, why can't JP Morgan? I know it moved a little further and faster, so it could play a little sideways catch up, but it was nice. It was right around here. If you look at the 5-minute chart, this was when we were looking at it. Boom, and a nice little move in JP Morgan from 33.60 to as high as almost 34.20 before closing at 34. And I bet you if you look at Goldman Sachs through 102, it exploded. Here's Goldman Sachs. Look at this move, guys. First it played with it a little bit, and then finally when the futures went, that was the move from 102 to 105. You can make a nice living on looking at bull flags for situations like that. Unfortunately, we don't get that many of them, so when it happens, you gotta be there and be quick. This morning, NFLX showed some relative strength. I know it's a broken stock, but we've been trading it the last few days, and it's been giving us some cash flow. This is when it showed some relative strength when the market was actually, this is earlier in the day. I'm sorry. Let's go here. Okay, look at this pattern, guys. This was when it opened up today. Sorry, I keep drawing these bad lines here. Hold on. Wait a minute. Anyway, opened down a little bit, and then look at this resistance that it cleared early on as the S&Ps didn't even think about it. So this showed you relative strength, and it was a good trade up until about 71. I took most of it off, kept the trailer, and then it gave you a little bit more before coming in, but it did close near the highs. You look at the daily chart, you know, we talk about one man's trash is another treasure. I know that it's been battered and bruised, but lots of shorts in here. A lot of people are done selling for tax losses, so it's, you know, inching its way higher. You know, keep taking trades here and just use it as a cash flow vehicle. SINA did the same thing. Don't really like this this chart at all. It's pretty broken, to be honest. But I guess you could say from this low, it held higher, closed green, went first. So maybe it goes a little bit. I'm in small. And then you had Google. Google, I missed the retest of that 618 area, but some guys on the chat did catch it, so congrats to you. If you look here at Google, you know, you'll see that, you know, this was the prior high. This was at 618, and that's somewhat what got tested today. Okay, and it closed okay. So sometimes they come back and retest these levels. So this level was retested, held up, you know, go a little sideways, and then perhaps if the market does break out, Google's been the strongest stock. You look at the weekly chart, it looks awesome. Okay, I'll give you a macro view here so you can actually see it. It's knocking on the door. I don't know what it's going to take to bust through the door, but it'll probably have to be a better market. But when it does happen, once it gets above and clears this, there's really nothing in the way in Google back it up about right around here, around 700. You know, and this was back in 2008, so Google hasn't done a thing. If you look at this almost too, you have a big cup, really long handle, and now it could go. And if it ever really was, if this was true from 300 to about 650, you measure the move from 650, 300 points, you're talking 950. I think it's going to have to do a stock split to get there, but who knows? We'll see. You know, patterns measure movement, and usually you don't know what's behind them, but that's that. Casinos, LVS is okay. I mean, a little bit, still building. You know, look at this high level tight. One of these days, this is the weekly, it's going to break out and go, unless they're really duping everybody here. But I would think that it's hard to hold up here without real buyers. You know, and then if you look a little bit closer, you'll see that you know, it's in the game. Today, I don't know why it did a bad tick here, but I think it closed okay. And if it starts getting above, oh, actually the weekly, I'm sorry. So you go back to the daily, you can see it a little bit different. You know, first green day after a move, this is that descending channel, came back into it. And now if it were to start getting above, you know, this area, I think you could add to it for a move back to these highs. And look at little MGM. MGM waking up a little bit. You know, you go to your daily chart of MGM. You know, I haven't looked at it in a while, but looks decent. You know, it looks like it's coming into resistance, closed okay. You know, you have a level right here. There is some talk that Vegas is getting more traffic, room rates are getting better. I was there for the convention, and I stayed at their new city center. It was pretty beautiful. And now if it can get above 1050, you know, maybe it was as high as almost 12. So tax loss selling is done. And at some point, if you remember in August, it was up here at 16. So people probably took a lot of losses on it. So maybe it lifts to 11, back to 12. So don't make it your focus, but if you want to put it in your swing account, you want to put it in the draw, I do think by some point, it could be January, February, or sooner, you'll see 20, which will be a nice 15 to 20%. So not too bad. And then who knows, maybe it catches a little tailwind. So all in all, it's been a very news-driven tape, which is hard to handle. There's been cash flow trades along the way. There are people who are positioning to what could be a better fundamental 2012. Figure it out where you want to be. I know the OAHs were a little weak today with the oil number, but I think that it'll take it in stride. Tomorrow could be a better day. If you go into these OAHs, still no big deal. Here's that pattern I drew, the left shoulder, the head, the right shoulder. You know, as long as it stays above this area, I think you could be in a tier 1 OAHs. Add a tier above this pivot of about 128, and then at some point next year, perhaps it closes and ignites above this 131, and the measured move gives you 160. Okay, you think about the fundamentals that Stephanie talked about today, and it seems as if these stocks and ththese companies are ready to rumble, trading like a 10-year discount. When do you hear a 10-year discount? You know, they all earn a lot of money. There's some dividends around there. They've done some acquisitions that have all been, you know, they've done the attrition already. So, you know, this group can catch fire, and I think that she's very smart, and I would definitely, if you're looking at a longer-term plan into next year, buy some OAHs, buy maybe some of those stocks, you know, re-listen to her video about the fundamentals. But again, know your risk, and that's a little bit longer term. We'll be in there for some trades at times for momentum, because you do get momentum in this group. But, you know, they both can, those two worlds can combine, you know, at times. So it'll be good to be in on both levels if that's what you want to do. So a lot to handle tomorrow. Hopefully, I don't get blasted. As you can see by my virtual trade floor, I'm along a lot. We're knocking on that door. A few times when we knocked on the door, it went backwards in my face, and I had to deal with a 15-handle down move tomorrow. Let's hope that tomorrow is not one of those days, and that's really about it. Long week, but there are trades to be had on every different level. I'll see you tomorrow morning at the call with Jill. Have a great night.